are these markets like taking into account of the survival of all of us? Maybe yes, maybe no, but we don't see it in an explicit way. I like to say that we're solving the problems between Republicans and Democrats with regard to ESG. Once you actually can demonstrate that there is a dollar value, then you create incentive for everybody to work on a sustainable way. It starts with investors, right? Because investors, to a big extent, can drive how companies will operate. Basically, this is the mission: create new valuation models that would integrate human, social, and natural capital in an explicit way. We're bringing more transparency, comparability, without putting the IP of the asset managers at risk. And we are allowing like the whole ecosystem to see a little bit clearer and to find a sort of consensus.
So, Mariem, what does it mean to align value with valuation?
Wow, so that's actually how ValueCo started, because value is for values and co for together. And initially it was called metrics for measurement, but we made it shorter. I think we live in a world, where financial markets are a bit disconnected from, what matters, because basically I have been working like in financial markets for 15 years, and at some point I was thinking, okay, are these markets like taking into account of the survival of all of us? Maybe yes, maybe no, but we don't see it in an explicit way. So the idea here is really to build a new financial market metric that captures what investors are doing on sustainability. And because once we have that metric, then we can really understand what traders, investors think about sustainability and how they really integrate it when they invest. And so we can therefore align values with the valuations.
So, let's do a zoom in on your background and the history of ValueCo. Tell me about how you got into this field and what you're trying to do exactly with ValueCo.
Okay. So I don't know how far I should go in my background, but like I'm an engineer by background and I did applied maths to finance. So basically when I started, I did a lot of like financial modeling and stuff. I've done structured equity derivative structuring and then structured product sales. And so I really believe that financial markets are the blood of the economy. And so if something is material, that it needs to be seen in financial market. Like we need to see it, we need to know what market participants are doing on it. And so like during the first lockdown, I was thinking, okay, like is this really pricing or taking into account the survival of all of us, because Earth will stay, yeah, but it's about humanity, whether we will still be around or not in good conditions, right? And the idea here is really to try to find new valuation models that would integrate in an explicit way sustainability into the pricing, right? That we really see how it fits into like all the discounted cash flow models and all that. But for that, like we need a market parameter. Because today, the way it works is that everybody is doing his thing in his corner. So, like companies actually are publishing sustainability reports. Then you have agencies, rating agencies, who are rating the companies on their environmental, social, and governance practices. But then investors, like asset managers, are rating the companies internally. So they are building an internal proprietary scores. And these scores today remain in-house. So we don't know what overall the market thinks. There is a huge diversity of opinions that is not captured. And that's what we try to, achieve. Because this way we can like show to the whole ecosystem that sustainability matters, and we can really link to the stock price, to the credit quality of the company. So yeah, basically this is the mission, is to really create new valuation models that would integrate human, social, and natural capital in an explicit way. And for that, we need a market parameter. We need like to know, okay, what overall investors think about the sustainability of a listed company. And also you can look at it this way, that today there is actually a systematic data flow going from companies to investors on sustainability, because companies have the obligation to report, but there's no systematic data flow the other way around, like from investors to corporates. And so in a sense, like we are also building this systematic feedback loop.
So what has ValueCo and what have you been up to in the past, year or so since, going through the Techstars Accelerator program, graduating? It's now been a little bit of time since then. What's been going on in your world?
So a lot has been going on. So we have finished developing our SaaS platform, because what we do is we go to different asset managers, we ask them to contribute their proprietary scores in a confidential way on our platform. We harmonize these scores, we anonymize it, and we rebuild like the market perception. And from there, we provide analytics to the corporates so that they understand what investors think about them on sustainability. So on the E, on the S, on the G. I mean, if you are like a public company, you're driving your strategy based on your stock price, based on your funding level. But today you don't have an aggregated view on your extra financial performance. So that's what we provide to the corporates. On the other side, like we provide also analytics to the asset managers, to the investors themselves, because we tell them, okay, this is how the whole market is looking at this company, and this is where you guys are. And then, in a sense, so we're bringing more transparency, comparability, without putting the IP of the asset managers at risk. And we are allowing like the whole ecosystem to see a little bit clearer and to find a sort of consensus. Doesn't mean that if you are an outlier, you're bad. On the contrary, might mean that you're really good, that you saw something that the rest of the market didn't see. But like you need to be aware of it, right? And if you're an outlier and you don't know why, then you have an issue. Um, yeah, so since Techstars, basically now we have 25 contributors. We have like big asset managers like ABN AMRO, Mirova, Comgest contributing. We have data on like 30,000 companies maybe, and like good data on 5,000 companies. We've been building partnership with the advisors of the corporate. So we're working on a joint offer with a big stock exchange here in Europe, but also we're working with the Big Four, with investment banking. We signed like a strategic partnership with ABN AMRO. We got an award for like best ESG market sentiment provider in the UK. Yeah, we published a paper that got the PRI award. We are on our way to publish the next paper that should be useful for the whole community, but also for the regulators. We're having actually interesting discussions with the regulators locally, but also at EU level. Yeah, so a lot going on.
Yeah, it sounds like there's a lot going on, and congratulations on all those accolades. Honestly, it sounds like you've been really busy for the past year or so. I am curious, in your own personal opinion, and this is, coming from a point of what I see a lot on media and social media outlets. Do you feel like it is as bleak as the media channels and the public are making it out to be in terms of how corporations are looking out for their ESG and their sustainability aspects? And if so, what really needs to be improved? Where is the biggest opportunity for us to make some advancements?
Yeah, I mean, I guess it depends where you're looking, right? Because ESG became a forbidden word in the US. Kind of, right? I mean, it became a political issue between like Democrats and Republicans. And in a sense, I mean, I met the trustee from Texas last summer, actually, in person. And these guys, like, they have, like, by federal rule, that they cannot invest if they cannot show that there is, return on that. And one of the things that we are working on, like with this market parameter, is to establish a dollar value in front of ESG. So this way, in a sense, this is the funniest thing I like to say, that we're solving the problems between Republicans and Democrats with regard to ESG, because once you actually can demonstrate that there is a dollar value, then you create incentive for everybody to to really work on a sustainable way. And it starts with investors, right? Because investors to a big extent can drive how companies will operate.
Can you break that down a little bit more? Just what is the process even like for establishing a dollar value behind ESG, just so that there can be, I guess, a universal, not definition, but understanding of how worth it is for a company to take that into consideration?
Yeah, so it's not clear today. I mean, today there is a big impulse from regulation. So if you're not complying with the regulation, I mean, especially in this part of the world, then you're running risk. So there is clearly um, like a risk that is financially material. I can give you also like another example that is more of a reputational risk kind of. So there is like one French company. It's called Teleperformance. And end of last year, what happened was that the Minister of Labor in Colombia tweeted that they were going to investigate working conditions at Teleperformance. And so a couple of weeks later, I think 2 weeks later, the stock dropped 30%. So this is like today, the ESG risk is material, is financially material. What is not clear yet, what is the premium? So what is the upside if you are, really working on sustainability? And the upside is not seen because, we don't have a market parameter. Today, different investors actually are investing with regards to, they are taking into account what the company is doing. So basically, what they do when I talk about their proprietary score is that they look at what the company is doing in terms of environment, society, and governance from a risk side, but also from an impact side, and they decide to invest or not based on that. So they have like really a filter. So they exclude a certain number of companies, but also they decide like whether they invest or not and how much eventually they would invest. Many investors are doing that, but each one in his corner. And so we don't see indeed like how it's influencing and what is the potential return, because it's not captured. And this is like our mission, like to capture that in order to establish this dollar value.
Yeah, and it's also,
I don't know whether it's clearer.
no, it makes sense. And it seems also like there's definitely a portion of the investment side that isn't quite focused on these parameters yet. And by establishing that baseline, you can help to, create it so that they are more interested and want to consider it more when they're considering what companies to invest in.
Yeah, I mean, it's in a sense, there are like two movements, there is like a top down, more like regulation and investors, but there is also the other side that consumer, they want more and more sustainable products. They want, they don't want plastic, they don't want, so this is also like awareness of the final consumer that will also lead this movement to kind of really be there. And this is also like about aligning, okay, like each of us aligning your own values with what really matters for you, for the planet, all that.
That makes a lot of sense. So I want to zoom out a little bit now and just backtrack. Can you tell me about what your experience with the Techstars program was like? You went through the ABN AMRO program. How was that? What were some of the biggest takeaways that you had from the program?
So the program was pretty intense. I mean, a lot of takeaways. I think probably like all the conversations with the mentors, like Techstars has a really cool networks, I would say, and people like were very open, very giving really good advice. We also during that period like worked on our brand, on our like also technical solution. So it really allowed us also to structure our business plan and all that. So this was really useful at that stage, and like it's still useful, you know. And also it's not just like during the program, it's also after the program, because we like I get so many people, you know, contacting me on LinkedIn saying, hey, this MD told us about you or whatever, and so we would jump on a call, and usually it's really interesting discussions, and they also like make good introductions. So I think it's I would say like first is the power of the network. Second is, yeah, like the like how much you can accomplish in such a short time with the help of like skilled, I would say, mentors, and also people around, like team, the Techstars team itself.
Yeah, it's a really great environment to undergo a ton of growth in a really short period of time. And I think being surrounded by those other high performers has a huge impact on you as a founder. So that's great to hear.
Yeah, it's also, I mean, a very good point. It's also like really, you know, like different fintechs and startups like helping each other. I mean, the network is also like not just Techstars network with the mentors, but also like the alumni and the startups themselves. So it's really interesting synergies and coordination that yeah, you can create.
Yeah, it's a pretty awesome group of people for sure. So I want to talk a little bit about capital. Have you done any fundraising yet?
So we are actually just opening a round.
Okay.
So we just closed our first like client commercial contracts, and we are like in due diligence processes with big banks and asset owners, not just in France, but also in the Netherlands and New York and in Canada. So now we're just opening around to have more people like on the sell side, but also on the research side to help us move forward faster.
What are the points of traction that you're using to, measure your success and express to investors that you are a viable company?
So the first point of traction is the amount of data we collect, because that's like how representative it is of the market, and it's also like how representative it is of how asset managers and the investment community trust us. So I mean today, like if we calculate all over like all the asset under management of the contributors, it's 1250 billion. So it's 1.2 trillion. So it starts to be something. Yeah, and this is something like we have a bit of, you know, kind of deep tech feature in what we do, because in a sense we're building a new market parameter. So it's as if in the industry you would create a new material or a new type of iron or something. So like we're creating something new with several use cases at different levels and different institutions. Yeah, so I would say like first is really how much data we can aggregate and how much trust we can get from different asset managers. Second is yeah, how many we can convert into clients, of course, and third is all like the research that we do with the different like academic partners. So today we have a partnership with MIT, with the Neoma Business School, soon with HEC Montréal. So like we're really trying to have academic partners all over the world. We work also like with the different associations, whether it's for example UKC, FEAR. We talk to the regulators. So it's really this is also like visibility and like presence in the market, like in the sustainability ecosystem, but like the financial ecosystem as a whole.
And you mentioned that you have a strategic partnership with ABN AMRO. What's that been like? I'm sure that, generated from the program, but how are you utilizing them and leveraging their, mass awareness?
So basically, I mean, as I mentioned, we have like different use cases for our data. So first, we are working with them on the research side. we're also working with them on the asset management side because basically there's a new directive called corporate sustainability due diligence, and that means that asset managers and banks are responsible for their data they use. So basically, as an asset manager or a bank, like you need to set up like a data validation process. And so we're providing like benchmarks, basically the consensus and where the asset manager is for every um, issuer or instrument they have in their portfolio. And so this helps address the regulatory demand. We're also working with them on the debt capital market. So basically, if you are a bank advising a corporate on issuing a bond, then you want to know like what market participant, what other investors think about the company from a sustainability point of view, and whether that's going to play a role in the pricing of the operation, right? So yeah, so these are like the three departments we work with. But when I say like it's a strategic partnership, like yeah, I mean ABN AMRO has been introducing us also to other asset managers, and like we're collaborating closely with these three departments and investigating also other use cases within the bank.
What sort of advice do you have for other founders, entrepreneurs, people in this space who are just starting to consider how their company is going to leverage ESG and sustainability capabilities? What are some things that they need to consider? And what are some things that you're seeing not enough companies are doing in this area that should be done a little bit better?
Like when you are talking about companies, you're talking about like listed companies or like startups or like
Startups, like
how?
let's say an early stage founder that's just graduated from a Techstars program.
Yeah, I mean, I think you need to, of course, like it's not easy to collect data or like when you are like just two people or three people and you're just using a bike and whatever. But I think it's a matter of first of establishing a process and like really being aware and keeping track of things that you are doing, but also mostly like how you establish your business, like how you can optimize, for example, um, your processes, or like when you are building even a tech, like how can you optimize the data that you're using. So all that, it's really it should be embedded by design, you know, like not that you are coming afterwards and thinking about this. It's when you think about building something, like really think about it. Okay, this is what I want to build, like how I can build it in the most efficient way, but also in a way that is taking into account the environment, the society, the governance. And for example, I think for an early stage startup, it's very it's not so easy on the side, but because okay, I don't know like whether you can establish like a carbon footprint if you are like three people,
Hmm.
but then it's much easier on the S side, because then you can really okay, already like establish a process on how you're working with people, that you make them comfortable. If you're hiring trainees, like that you make sure that it's balanced, all that. So already that part is very important, and it's important to think about it like from the very beginning, because it should be first part of the culture of the company, I would say.
Hmm. Yeah, and then as you grow and you're incorporating those societal elements, you can bring in those other two elements as well, and just making sure that, like you said, you have those ideas and those strategies from the beginning.
As soon as you are like 20 people, then it becomes, you know, and that you have a, you know, an established office or like two offices or like people commuting, etc. Then there is like some stuff to be measured.
Hmm. Yeah, and you don't want to be late to the game. Like if that's something that you're considering from the get-go, even when it is just two or three of you and you're doing as much as you can, maybe you don't have the bandwidth or there's not really that many ways to track your impact. At least if you're thinking about it, then as you grow, it's going to be something that continues to stay on your mind.
Exactly. So for us, for example, like from day one, like we are a mission-driven company in France, and we are also signatory of the PRI, the Principal Responsible Investors. And so that means that we have already, established process, and then in 2 years that we need to report on this. At our level, of course, it won't be the same reporting as I don't know, like a big corporate, because we don't have as many activities, but there will be a few things to say.
Do you have like favorite brands or companies that you feel like do a really good job of demonstrating excellence in like the ESG and sustainability spaces? Like, if I were to say, give me your top three ESG and sustainability excellence companies, who would you pick?
I mean, it's a difficult question, because I wouldn't pick like companies like that. I think everybody should, it's the progress that is more important than where you are now and how fast the progress that you make. So I really value companies who are, like, not exactly like super good now, but that they are really have real plans, and that they are sticking to the plans, because there are many companies, they say, okay, this is what we plan to do, but then nothing happens. So I really value companies who are investing a lot, like, from their capex and R&D, about like transition, how they're changing their, like, strategy to really shift towards sustainability. I think it's really, for me, it's not the status at one point in time that is important, but is the speed at which the company progress in that direction that is important.
That makes a lot of sense. Well, Mariem, thank you so much for taking the time today. I really appreciated this conversation, and I look forward to seeing how ValueCo continues to grow in the future and brings in new investors and new companies to really focus on those ESG and sustainability implementation strategies.
Yeah, thank you. Great talking to you.